Well, ladies and gentlemen, my name is Greg Michalowski, and today's date is August 14, 2014. And I'm going to take a technical look, or a look at the technical shaping the Forex market. Yeah, let's start off. I don't want to do that. I want to do the euro versus U.S. dollar. The euro versus U.S. dollar on a daily chart. This is a daily chart of 7 of the last eight trading days has traded above or below the 50% retracement level of the move up from the July 2013 low to the high that we saw in May of 2014. That 50% retracement level comes in at the 133.75 level. And if I zoom in here, you can see the number of different days here where the market's traded above and below it. I think this one day right here is the only day over this period right here where the market did not trade the 133.75 level. So what does this say to you? It says to me, well, here's what it says to me, is it says that the market's unsure of the directional bias. We go down, we try the downside, we can't go lower, we come up, we try the upside, we can't go higher, we go down, we try the downside, market's unsure. Over the last 14 days, this period right here, the market's traded in 112 or 13 pip trading range. That's not a lot over a nearly 3-week trading period. So again, another indication that the market doesn't know which way it wants to go. So what are we doing here today? Well, we're above the 133.75 level. That's this horizontal line right here, which also corresponds on the hourly chart with the 100-hour moving average. 200-hour moving average is not far away from that level. They're converging here as they do when the market non-trends and goes up and down. And so we're seeing the market above those levels at the 133.75 level, above the 100 and 200-hour moving average, and that gives it a little bit more of a bullish bias, doesn't it? Now, where would we not want to see the price move back below? And that includes those two levels right there, the 100 and 200-hour moving average. You don't want to see the price move below that level. We can also go to the 5-minute chart. Put up the 5-minute chart. I'm going to zoom over here. Put a Fibonacci retracement from today's low to today's high. We are trading near the high price here today, and I'm going to outline the 38.2 to 50% retracement level of today's trading range. And lo and behold, the 75 level comes in right there at that 50% retracement line. So 133.75 is the line in the sand that if you're bullish in the euro versus US dollar, you don't want to see the price move back below that level. So keep that level in mind. Let's take a look at the sterling versus US dollar. I'm going to start off taking a look at the daily chart. Why? Because you see this support area right here. It's right on the trend line support. We've came down to it yesterday and today. This is just a parallel trend line to the top trend line developed right here and here, and just put another line here, and lo and behold, the market held support here yesterday and held support again here today around the 67 level. Not far away from the that level is the 200-day moving average. The 200-day moving average comes in at the 58 level here today, and the low for the day came in at, I guess, 56 or something like that. So we came right down to the trend line, right down to the 200-day moving average, and the market bounced off of that level. That's somewhat encouraging for those dip buyers. What you can do is just define your risk and limit your risk against that level. That's the most important thing. Here's what it looks like on the hourly chart. Came down to that 58 level, which is the 200-day moving average, and the market bounced off of that level. We are higher on the day. This line represents a close from yesterday, so we are a little bit higher on the day in trading here today. If you're inclined to be a dip buyer, today might be the day. Where can your risk be defined? And I'll take a look at the 5-minute chart here. And if you look at the 5-minute chart, big day to the downside, consolidation, go down to the 200, move back above the 100 and 200 bar moving average here. Those two moving averages converge around the 166.80, 182 level. And so that would be a risk level, low risk level. If the price stays above that level, it's bullish. If the price moves below that level, then it's not so bullish. And as you can see in trading here today, or in the London session, or in the early New York session, we're trying to find some support against that 100 and 200 bar moving average. So keep that in mind for the sterling versus US dollar, looking a little bit more bullish. Let's take a look at the dollar versus yen and this currency pair on the daily chart here. is very confined trading range. If you look at the weekly chart, you can really see it here for the entire year here. The market's been in the doldrums here, and the dollar versus yen on the daily chart doesn't look all that bad, but it really is. This is a high for the year. This is a low for the year. And the market has not been able to move very far, and especially over the last few trading months. What we did do in the end of the last month, I guess, was we actually moved up and actually took out the previous high price going here, but only by a few pips, and then the market started to rotate to the downside. The other thing that we did do here on the daily chart was that we held the underside of the broken trend line here. So for whatever reason, the market did find support here against this trend line, which had 1, 2, 3, and then a break up here and came back down to it. So that's good news. And the third thing that the market's done here over the last few days is stay above the 100 and 200-day moving average, which is in between this trend line and these trend lines on the bottom right here. So we're showing a little bit more bullish here in the dollar versus yen. Now, if we take a look at the hourly chart here today, however, the market is down, trading near the low levels for the day after the initial claims data came out weaker in the United States. And so we are testing what is a key support here on the hourly chart against the 200-hour moving average, against the 50% retracement of this move to the downside at 102.27. And we also have the 200-day moving average, which is this green line right here at the 28 level, overlaid right here with this horizontal line right here. So there's a lot of stuff going on right here, not to mention the 100-hour moving average. All this is support here for the dollar versus yen, this yellow area. So if the market is going to go higher, we need to find support here. We cannot go below this level. If it goes below this level, that would be, just another rotation and try to break to the upside and failure, move back to the downside. So that's what I'm seeing in the dollar versus yen. Dollar versus Swiss, like the euro versus US dollar, caught up here in a narrow trading range over the last 3 or so trading weeks. Not much activity trying to test the lows in trading here today. Trying to move lower, and finding support against the prior lows right here. Also support against the 38.2% retracement of this move up from the July 14th low up to the high right here. 38.2 comes in at the 90.31 level. Let's just say we need to break below the 90.31 level in order to move the price lower. We tested that 31 level right here, and the market bounced. We're coming down here, and we got to about 33 or so today, and the market bounced a little bit here as well. So not totally done yet here in the dollar versus Swiss. That's key level 90.31. Let's take a look at the dollar versus Canada, and this is one of those currency pairs that you scratch your head. This move to the upside here was the employment day last week, and the market moved sharply to the upside, but we found resistance against the top side, or we couldn't get above that high right there. Next thing you know, on Monday, we get a little bit stronger data in the markets. It takes that whole move back to the downside, or that move to the upside, takes it pretty much all the way back to where we started on the employment day, and subsequently over the last couple of days, we moved lower. Now we did find some support here against the 108.79 level here, which is the 38.2% retracement of the move up from the July 23rd low for this currency pair. This is a trend move to the upside. Found support against that 38.2 or close to it, I guess, and also near these lows right here, and starting to move a little bit higher to the upside. So we're seeing a little bit more bullishness here on the 5-minute chart, seeing that as well manifested itself by the move above the 50% of today's trading range and the 100-bar moving average. As you can see, we're running into a 200-hour moving average here, but if we move above that level and then the close from yesterday, which is this line right here at the 109.13 level, we should see some further upside to the for that pair. The Aussie versus the US dollar tried to make a break here today above the hourly trend line here, but ran into its 38.2% retracement. Remember, this is opposite than what the dollar Canada. So when we're looking at the dollar Canada, we run into the 38.2 on the downside. When we look at the Aussie versus US dollar, we run into 38.2 on the upside. And so the market's trying to rotate a little bit off of that level, or at least found sellers against that level. Watch the 93.13 level on the downside. If we move below that level, that's more bearish. And finally, the New Zealand versus US dollar, might as well complete the circuit for all the currency pairs against the US dollar. Major currency pairs, that is. We did come down in last week's trading and fell below the 200-day moving average and extended down. We could not get below this low, however. This low for the month of June, also not for the year, but it was a level that we needed to get below and couldn't. And today we're seeing a rebound to the upside on the back of better retail sales that came out of New Zealand. Now this yellow area right here, this was a key floor area, fell below it here and fell again below it here. And we're back to that area right here. So this is resistance here at the 85.15 level, 85 to 85.15 level. We'll see if the market can break above that level. That would open up the door and put the kibosh. It's already almost a bottom is almost called right here because we are back above the trend line, back above the 200. And now we need to get above this yellow area right here, which was a nice little floor area through here. And the market remembers those levels, so we'll be watching that closely. My name is Greg Michalowski. This has been a look around the Forex market. Talk to you later. Bye-bye now.